joining us today, and welcome to our Salary Guide webinar. I'm David Brown, and I am the CEO for Hays US. As previously mentioned, we've blocked out about 30 minutes today to go over the guide and our key findings. We'll reserve some time at the end of the program to answer any questions that you might have, so please feel free to send your questions via the chat function on the WebEx tool at any time during the program. So a little bit about us. Hays US has more than 80 associates in our construction and property business, based in 8 offices across the country. So we have a fairly broad perspective on what's happening in the industry. Overall, Hays US recruits in IT, life sciences, and accounting and finance areas as well. So we have a very broad view of the big picture national hiring patterns that occur. So I also have with me on this call our main presenter for the day, who's Mr. Alex Powell. Alex is our Senior Vice President in charge of our construction and property business nationally. Alex?
Hi, good afternoon. As Dave said, Alex Powell, my name is Alex Powell. I've got 20 years of recruitment experience, which has predominantly been focused within the construction and real estate sectors in a number of different countries around the world, most recently here in the US, where I've been for the last 6 years. And I'm responsible for the growth and development of that Hays construction and property business here in the States.
Great, thanks, Alex. We'll hear more from Alex in a couple of minutes. But first off, some high-level highlights. Many of you have seen our salary guide last year and our market trend guides from years before that. We've made some changes to this year's report, and I'm happy to say that this year marks our first all-market guide, looking at national trends in 5 key sectors. We've had more than 3,000 respondents speak into this year's survey. They provided us with all the key data points around salary data and hiring trends, which in turn allowed us to come up with our recommendations for you based on this information. So a few things that you will learn from this webinar. We'll start with some of the key findings on the market overall. Next, we'll focus on hiring trends in construction and specifically what professionals are looking for. And finally, we have some insights to help you compete for local talent. So some of the key highlights. Overall, we're looking at another very busy year in the construction space. Over half, 55% of employers say the economy will strengthen in the next 6 to 12 months. 64% of employers say business activity has increased thus far in 2018. And 51% of employers increased full-time headcount in 2018. So all in all, it's been a very busy year, and the optimism remains very high that 2019 will be the same. So the number one factor driving all of this growth in this year and next year, according to the respondents, will be evolving technology shared across multiple industries. The second one should come as no surprise. 78% of employers say that they suffer from a moderate to extreme skills shortage, and 98% of employers say that this skill shortage is directly affecting their business outlook. So an overview of the market. I'll start at the top with business activity and economic outlook, and then we'll look at how that's affecting hiring plans and compensation. Overall, confidence in the U.S. economy remains very strong amongst employers, with more than half predicting continued growth in the next 6 to 12 months. The U.S. economy shows no signs of slowing, and that expansion has meant continued business growth across the board. Over half of employers saw business activity increase in 2018, and 3/4 expect growth moving forward into 2019. The industries most likely to say business activity will be increasing in are construction and property and information technology, which is not surprising to us given the number of construction projects that we're seeing in all of our key hubs and the continued investments that we see in the technology world across all industries. So next we looked at what's the impact that this has on the workforce. The downside to all of this increased activity is that it's becoming more and more difficult to find people to fill specific roles. 78% of employers are experiencing a moderate to extreme skills shortage. This is having a direct impact on businesses, with 98% of respondents saying it is impacting their business outlook. 19% of respondents said that it is directly impacting productivity, and 10% said that they can draw a direct correlation between the skills shortage and missed profits. So the bottom line here is that the skill shortage is not conceptual anymore. It's not theoretical. It's not a discussion point. This is something that is actually impacting the productivity of companies and ultimately the bottom line profit. So on that note, I'm going to hand it over to Alex to talk through some of the key details of the report. Over to you, Alex.
Thanks, David, for the high-level overview. Now we're going to look specifically at hiring trends within construction. So all this optimism is having a direct impact on hiring plans. Last year, we saw a significantly large volume of hires for permanent staff, where 61% of construction employers increased their perm headcount, their permanent staff. For 2019, the plans will continue to remain positive on the full-time side, with 60% of employers looking to add more full-time workers. So let's have a look at hiring plans for contract workers. In 2018, 18% of employers increased their contract workers. Looking ahead, 34% of employers plan to retain those contract workers that were hired last year, and an additional 22% plan to further grow that flexible workforce. We asked employers which areas they plan to hire in 2019 and came up with the following results. In full-time hiring, we're seeing superintendents as a huge area for hiring, along with project managers and estimators, which I'm sure doesn't come as any surprise to anybody in the construction space. While in contrast, employers are hiring fewer contractors for these types of roles. However, we're still seeing assistant superintendents as being the most in demand within that contract space. We asked about salary increases. And as you can see the results on the screen here, overall a healthy range of pay increases. In fact, construction employers are slightly more likely than the average companies to be offering salary increases. The increased salary is about 5%, 1.5 times as often as any other industry, and above the national average at the same rate. While that trend looks to be slowing in 2019, a rise in mid-range increases above 3% looks to balance out that reduction in high-end raises. However, this chart doesn't tell the whole story. There is also a lot of wage pressure in areas with a shortage of skilled construction professionals. So let's look at where that pressure is being felt. These are the top 3 as reported by employers, and as you can see, it is very high for these areas. And if I look at the roles employers said were hardest to fill, there's an overlap when it comes to PMs, to project management positions. As well, chief estimator is one of the most sought-after areas within construction this year. Estimators and senior leaders are also highly sought after. So the skill shortage in that space just continues, and it's certainly been an ongoing trend for many, many years. So that's an overview of the business, hiring and compensation trends we're seeing. So let's go down a level and talk about some of the specific hiring challenges employers are reporting and some of the actions you can take to overcome these issues. We asked construction employers about the skill shortage, hiring challenge, and how they're recruiting staff. So let's look at some of those results. Before we look at hiring, we need to understand what the main motivators are for people leaving a company. Job seekers and current employers told us that salary is the main factor.
Sorry, Alex, I believe you were cut off there. I'll just hold on 2 seconds and I'll try and get you back on the line. Hi everyone, just bear with us 2 seconds. We're getting Alex back on the line. Thank you. Hi, Dave.
You can hear us. Okay, great.
Yes,
Sorry, everyone. We apologize. Technical difficulties.
Thank you for calling back in. Thank you.
Yeah.
Where did we drop off?
Just the current slide that is on the screen, if you could go back over that would be great.
No problem at all. Sorry about that. So, reason one, before we look at hiring, we need to understand what the main motivators are for people leaving a company. Job seekers and current employers told us that salary is the main factor, so no great surprise there. 31% of construction employees would leave their company for a higher salary. At least half of employees feel that their salaries are competitive, whereas the remaining 29% don't think they are, and a quarter just aren't sure. It seems many employers are recognising this issue, as 73% of employers had to increase salaries outside of budget ranges to land that talent. So with this in mind, how will you get ahead of this or be more in tune with your teams? Career progression and development is a close number two. It's also a significant concern where a third of construction professionals would leave their company for career progression. In fact, 85% of construction professionals are still upskilling in their own time and on their own money. Only 31% of construction employers offer paid training to address this. Employers still have to do still have lots of opportunities to support staff in their training and career progression. When it comes to recruitment challenges, employers struggle to find quality candidates the most. And I'm sure that's something that everybody on this call can probably agree with. In fact, 62% of employers say that receiving low-quality applications is their biggest challenge. Because of this skill shortage, local competition for talent and the ability to compete for that talent are also significant hiring challenges. So how are employers saying they're competing for top candidates? The following is a list that shows how construction employers say they're attracting top talent. The number one answer, as has been the case for a long time, is offering competitive salary packages. 63% of employers say they're doing this. This is a good thing, as salary is a top reason why employers leave a company, so it matches up nicely with that. As well, over a majority of employers are promoting company culture, which is also great, as you want to attract the people that are going to fit with your culture. But then we see this big drop in a bit of a cluster where we see training development, career progression, flexible working. Again, these are all important aspects to showcase. Offering career progression and training and development are critical attraction and retention tools. However, there are some key elements that a lot of employers are missing. Only 37% are promoting career progression, and less than half for training and development, which we know is a critical attraction tool. And as we discussed, growing your own talent is as important as building a talent pipeline. And then it's about 12% of employers are doing nothing to attract talent, or certainly that's what they said. So here are areas where we spotted opportunities to better align employers with job seekers. For each, we'll look at some of the mismatches that we've seen and then what we can do to bridge those gaps. Let's look at benefits and the benefits that construction professionals think are most important. Unsurprisingly, the two most sought after or most scrutinised when taking offer are health and PTO. The variation in health plans and the associated variance in premiums and deductibles make this benefit particularly important for employees, and one of the key reasons an employee may or may not move roles. And this becomes especially important when employees have families and have dependents. And certainly from our perspective in the recruitment space, this is one of the key reasons for somebody not accepting a role can be when the health package doesn't align with what they're looking for. Secondly, the other big one is PTO. Increasingly, this is, as in paid time off, increasingly this is becoming critical as a recruitment and retention tool, with many companies now offering 20+ days. We're seeing many candidates turn down offers if the PTA doesn't match their existing package. And this is a very difficult one for companies to adjust on, because you need to have parity within your business. You can't match for PTO with a previous employee's package. The other benefits that were highlighted as priorities were 401k contribution and match, bonuses, and that personal development allowance, whether that's related to time and or dollars. So what can we do to better align with market expectations? My first stop would always be to talk to your staff, talk to your employees. What is it they want? A simple survey sometimes sent out to your employees can help you get some insights so you know what areas to prioritise in and where the most dissatisfaction is. And this is quite important because sometimes we think it's something that it actually isn't and vice versa. So actually really finding out what the true driver is very, very important. If you're not already doing exit interviews for your staff, both temporary and permanent, start doing that. Start adding that into your offboarding process so you can find specific areas to improve on and areas that are really important to your staff. Secondly, I would suggest using all your resources to determine market expectations, candidate priorities. What's happening elsewhere? What are your competitors doing? It's important to be in tune with the market. Salary guide like this is a good starting point, and recruitment consultants like ourselves talk to thousands of candidates a year in your industry, so we've got a really good holistic viewpoint of what's happening and what trends we're seeing within the market, and very much in real time. Finally, when you're making changes, prioritise those most wanted benefits first. Making a big deal about introducing free snacks, for example, won't help if all your employees really want is extra time off. So find out what your employees want, find out what the market wants, and then incorporate those into your plans. Where possible, work with a staffing agency, a staffing firm that offers benefits, particularly when you're dealing with temporary staff, because these are all huge retention tools. We also asked our recruitment consultants what they found was most effective in hiring top construction candidates to see what challenges they were facing. And they came up with the top three. These are the top three pieces of advice that they gave. Firstly, be sure to move quickly when the right candidate comes along. Many of the candidates that we're working with within the construction space will have multiple offers and don't stay on the market for long. So speed is definitely of the essence. Consider taking a very proactive approach to hiring by building out a talent pipeline, networking as much as you can, using specific niche job boards to find better candidates, and inviting candidates along to company events, just getting real face time with them. Secondly is being open-minded about candidates that may have gained experience in different sectors. So it may be an estimator that's predominantly done residential, but utilising that person within a retail, a business that predominantly works in the retail space, is that a transferable skill that you can utilise if you can't find somebody with residential estimating experience? There's always transferable skills in most industries, so trying to look at those transferable skills is going to give you a bigger pool to pull from, which is very important to give you options. Lastly, in the race to pay the most, clearly only one employer can come out on top. So as well as competitive pay, sell your company, the work environment, career development opportunities, these stand out to candidates, and you can create your own unique employer value proposition. Salary matters, but you can't always win on salary, so don't focus purely on that. And it can often be very much outweighed by these other factors of company culture, career progression. And in turn, be sure to highlight your internal training programs such as mentoring, job shadowing, lunch and learns. As we've seen earlier, personal and professional development is a key factor for people staying or leaving companies. And plus, you're keeping that knowledge within the business and growing future leaders. So how can you reach a lot of these people with the right experience and the right interests? Social media is the best tool in the present climate. We have and because you can target very specific audiences as people. There are going to be 3 points here, but they all work together, so you can't do one without the other. So let's look at those. Building your network. The more followers or connections, the greater your reach. Pretty simplistic, but you've got to get out there, you've got to connect to build out that network. Secondly, once you get that, you need to be sharing the right content consistently to keep your audience interested. So if you want to attract project managers, you can't just share jobs, you should also be sharing local news, opinions on what's happening in the industry, project updates. If you're looking for contractors, for contract staff, promote the new tech that you're working with and success stories from current or previous contractors. You want to be seen as a good source of information. It's very much about being a consultant and building that network rather than just I've got a job. And while you're bringing them in with this great information, you can also demonstrate that you're a great place to work for and work at. Share companies' wins, promotions, new starters. So when you have a job opening, people are already interested in your company and have an impression of what it's like to work there. They built up a good impression. So that's a few points. I'll hand you back over to Dave now to summarise.
Great. Thanks, Alex, for a great run-through of the report's results. So those are our key findings and recommendations. I will do a brief recap now and then show you how you can take some action today, and then we can open it up to any questions that you may have. So in summary, again, overall, we're looking at another very optimistic year. Employers are confident in the economy and overall business activity. There are, however, 3 key recruitment challenges that we are facing. Number 1, the skills shortage is impacting productivity and profits. That's coming through loud and clear. So it's not just an annoyance or, again, conceptual anymore. The skills shortage is real, and it is hurting businesses. Number 2, training and development is not being prioritized currently. And just a side note that if we're ever going to get out of the skills crisis, then training and development has to be on the agenda, and it's going to be everyone's responsibility to contribute to that. And third, spending on salary for new hires has taken precedence over upskilling the existing staff. So this is a great short-term fix, but it won't help grow the talent pool in the long run. So some actions that you can take today. First, request your copy of the salary guide. Make sure that you're paying market rate. That's the fastest and easiest thing that you can do to do an assessment on your current staff and or current openings that you may be looking to hire for. Number 2, assess your current training programs. Where can these be enhanced to support career growth of your existing staff? And then finally, promote growth and training plans when hiring. Consider building this into your value proposition as a way to attract new candidates to your company. So that's just a snippet of the report that we have developed. Those are our key findings. To get even more information and insights, please go ahead and request the guide. You see the URL there on the page in front of you. Thanks for all of your time and attention today. We appreciate it. We'll open up the floor to any questions that you all may have before closing out the webinar.
All right, so we've got a question here. How do we alleviate our challenges of individuals shopping for offers simply to bump up their salary with their current employer? Great question. I think the key to this is exactly the areas that we've been discussing in terms of it's really about investing in your people so that they see that it's more than just dollars and cents. So getting to the point where they're not actually putting their feelers out there. And I look at this within my own staff, for example, where our staff get headhunted all the time, as I'm sure everybody on this call staff do. The key to me is that doesn't concern me. If I lose people, it's on me because I haven't done everything I can to retain them in terms of progressing their career, in terms of developing their talents. So I think it's very much about investing in the people so you don't get to that point. And the other aspect to it is making sure that you are keeping your salaries competitive. I think part of this is if you are massively misaligned with the market, then you're always going to come up against this issue. I think the key is making sure that one or two people will always do this, and you're never going to be able to get away from that. But if you're getting this consistently, then you need to really look at your compensation and work out, right, are we really misaligned with the market here? In which case you're going to need to look at doing something about that, because ultimately there's no way you can truly get away from that. I don't know if there's anything you can add to that, Dave.
No, I think that's exactly right. I mean, there are some people that will just shop offers and be the hired gun and always go to whoever will pay the most. But generally, if this is happening, I'd say to Alex's point, look at your current compensation. Are you in line with the market? And then number two, there's usually an underlying reason as to why they would consider offers from someone else, right? So is there an opportunity to invest more in that person, to connect with them, to add to your value proposition? Are there training and development things, investments that you can make? Are there other things that are really driving that? Because although we saw that salary was the number one factor, you notice that it wasn't a majority, right? So more often than not, it's the complete package and not just salary that would be driving that. But we do understand, especially in a competitive market like that we have today, that is a real challenge, right? There are plenty of people that are headhunting your folks. Like, that is a very real challenge. So I think more than ever, kind of investing and doubling down and getting that connection point with them and finding things that really matter to them are important now more than ever. Great question.
And I think, to add to that, what we see and what we train our recruiters is when somebody says they're moving for salary, our question always is, what else what are the other reasons? Because salary is often used as a headline, but there's generally other reasons that have driven that individual to actually look. So I think sometimes, if a staff member is looking for, they're saying it's about the dollars and cents, dig into it to ensure there isn't something else. Is it career progression? Is it location? Is it, training and development? What is it? Because it's generally something else that's driven them in that direction. And money's an easy excuse to tell an employer to get them off their back, kind of thing.
Right, exactly. Great question. Looks like that was the only question we had today, so we appreciate everyone's time and attention. Thank you very much for joining. Please download your copy of the report. Reach out to your local Hayes consultant for any additional questions that you have, and have a great rest of your day. Thank you.